Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Markets don't move every day, but the days you prepare properly often decide the trades you take next. I skipped yesterday's video as it was my birthday and I got home pretty late. The party got stretched. I got a couple of messages asking about the videos and sorry for that and thanks for your patience. Now coming to the markets. With tomorrow being Christmas and the markets closed, today's discussion is all about preparing for Friday's session. Holiday weeks usually compress the price action, and that's exactly where most traders either lose patience or lose discipline. In this video, we'll focus on how the market is positioned right now and what kind of behavior to expect after a holiday break, and how to approach Friday's trade with a clear, rule-based plan instead of emotions and assumptions. If you value clarity over noise, make sure you like the video. Subscribe to the channel if you haven't already and share it with a trader who wants to trade with structure, not hope. Let's get into today's analysis. So first we'll be decoding what actually happened in the markets today because we did not get to discuss it. So this was with regards to the 23rd of December price action. So we'll be deleting that. All right, so this was my birthday, and it was a very good decision to actually not trade. I would not have either, but then again, it was a complete sideways day. Uh, Doji, if I am not wrong, on the daily time frame. Today, since I got pretty late, I did not trade even a single tick today. In fact, did not even look at the markets. I was groggy and in a different zone altogether throughout the day. And that is why I do not prefer late nighters these days because they mess up the next day. Uh, but yeah, whereas today and yesterday combined, we are kind of seeing some retracement again with today's market closing around the day's low. In case if you guys traded today, let me know how was the day for you, right? So on the daily time frame, I believe it's time for us to adjust the fib levels. So we had drawn it as per the three green candles, right? You can see it right there. But the new high has been made and we'll be needing to slightly adjust the daily time frame fib levels right there. So right now what we can see is like we had planned earlier as well on a daily time frame. We had seen that this market is quite stretched and we can see some uh, pullbacks or retracements into the market. And once we are done with that, we can proceed ahead. So today's price action would have qualified as a very good inside bar had we not breached yesterday's high slightly. So on the price action part, if you see here around, we had slightly at the open breached yesterday's high and then came all the way down. A good trade again could have been taken around here, maybe at the break of this particular low, because out here the structure has completely changed. You got a good pullback as well, and then once this low was taken out, we would have around been around 50% of the entire day's up move as well, and this would have been a good entry trade out here. Apart from that, today I do not see any other trade being planned as per the setups that I personally use. So yeah, we have the revised daily fib levels available with us. We'll keep the video very short because there is nothing much to discuss. We'll make the plan of action for Friday very simple. Now, the reason why I have not marked today's low, but I have taken the day 23rd of December's low is not because it's my birthday and I find the day special, but because these two lows are extremely close. And either of the two will do. So a break below this with a pullback. Of course, we can take a short trade. I'm not telling exactly on Friday will we be revisiting these levels, but then again, it's okay and it's good to keep in mind. And for me, it's my part to remind you every single time that these are the levels around which we can look at some buying activity based on the price action and the market structure. Now, apart from this, I will also be using fib on this particular position, and I will mark out the point 0.5 to 0.618 zone because see, I believe in not predicting or assuming anything in the markets because the first rule, like I always say, is anything can happen in the stock market and we should be prepared for it. So in case if we move up above around these levels, this is the level around above which I will be looking to create a long entry in case if we go back around here and market has to retrace deep, right? So these are the scenarios which might play. Market has to re retrace deep and maybe retest these or even lower levels. Market might not go or continue directly from here. Maybe we uh, trap some buyers out here, form a good double top, and then we continue down. So this is the reason again out here again because this is the point 0.5 to 0.618 of this entire fall which had come in today, and I will be changing the color to red because of course it's a resistance. So out here if we see some uh, double top or maybe a negative price action, this is where we can take or plan a short trade. Above this we can look for a long trade. Apart from that, the biasness is still on the long side because on all majority price or bigger time frames, the price action is still very, very positive. And with me getting a good trade on the long side, I will be much more keen. Another trade that can actually happen is because the major bias is on the long side, is if we give at the start of the day, we get a bearish candle giving us a close below today's and Tuesday's low, right? These are the 2 days low. And if we get a close below that, and then the high of that candle gets taken out, this will be a good uh, scalp trade on the long side as well. The reason being, there's a good enough fall from the days high around 26 to 236 to 24, 131, roughly 100 odd points plus fall which came in. And in case if we see markets going back below this, this will be inviting fresh sellers. And once the high of this candle gets taken out, we can see a trade on the long side, which will be a trap setup based on these people's stop losses being triggered. So this is something which we will keep an eye on, and this trade will become a higher probability trade, keeping in mind that okay, we are also in the biasness is for trades on the long side. Plus, this trade on the short side can be taken absolutely in case if we get a good pullback and we get a continuation. Is we can also look at seeing a gap fulfillment out here. So this is the gap which is pending. Now, again, there is another scenario which I want to discuss, right? So although the support is marked at around these levels, right? So this is the daily fib, clean fib levels, right? So on the daily time frame, you don't get swings cleaner like this, right? I'll once again be showing you quickly a clean swing out here, a clean swing out here, up here, right? So this is a very clean swing and with very good levels to play around with. But then again, there is a gap, right? So while I was discussing about the gap filling trade, this is what triggered in my mind is that there is a concept which is known as explosion pivot gap, right? The names do not matter. I'll tell you the theory which is there, right? So usually market does not like to keep gaps in the chart on the charts, right? And markets will try to come and fill in all those gaps before continuing the journey in whatever direction it is, right? And there is a impending gap out here on this particular chart, and that is the reason why if we come down below this, it is not necessary that we need to retest or retrace all the way out here. Around here, I will be using a very special pathway chart, something which you have never seen on my charts before, right? Now, try to mind it, we need markets to go back below this low as well. And we have to see that the market is trying to fill the gap, but then does not. It reverses, right? This is where we can take a long trade based on the market explosion or the gap explosion pivot theory, which is there, where market tries to fill the gap, creates a pivot. Pivot looks like nothing but a series of candle on a candlestick basis pattern where it changes. Like this is a pivot. So this particular candle on this on today's price action. The 10-15 candle, if you look, it's a pivot on the upside, right? And from there, markets came all the way down. So how do you define a pivot candle? Is there has to be two candles preceding with lower highs, lower lows, with and two candles ahead of it, which has again the lower highs and lower lows, right? So that is something which is the get the V shape kind of a thing which is there on the pivot chart. So there will be a candle around here which will be having the lowest points. Out here there will be candle which will have higher highs and higher lows. And out here there will be another candles which higher highs and higher lows, right? So that symbols signifies a pivot candle. And if we see a market reversal out here, which without filling the entire gap, that is also a place where we can create long entries. So I hope the concept is clear. If not, wait for it to appear on the charts in the live market. I have explained it in some of the previous videos where it has happened. If you are a regular viewer and you remember this particular concept, very good, and go ahead and trade based on this. But if not, do not try and jump into trades based on this particular concept. Wait and watch. Try to go back, use tomorrow's holiday to backtest this about wherever market has left gaps into the on the charts, and markets have tried to fill the gap but failed, right? Simply is like market is trying to fill the gap, but it is failing because the buying pressure is immense, and that is where we can look at creating long entries, right? It is a very simple setup, and keep an eye out on it for it. And of course, you can use tomorrow's holiday to backtest and do your part about it, research about it. So yeah, that's it for today, guys. The goal is simple: don't predict, but prepare. With a holiday in between, Friday's session deserves patience, clarity, and discipline. If today's breakdown helped you see the market a little more clearly, make sure you like the video, subscribe to the channel, and share it with someone who's serious about trading the right way. Remember, the market doesn't reward excitement, it rewards execution. Trade well, stay disciplined, and I'll see you in the next one. And very Merry Christmas to all of you watching this video. Cheers, and thanks for tuning in, guys.